Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Discord community? Test. Do I have audio in Discord? Okay, thank you, everybody. Well, good morning. Welcome to the Traders Lab. On behalf of all the Trader Lab participants and myself, welcome. Appreciate you stopping by today. This stream's about integrating Bookmap order flow tools with auction market theory, using the volume profiles of chassis in the intraday developing time frame. It's based on structured trades. It's really about the business of trading. There is no secret sauce, holy grail, or plug and play. And I know, including myself, I wish years ago I had figured that out. And I'm really only talking about me. You know, your mileage may vary. You may have a completely different reality than my experience, but I've got a lot of experience. So over the years, I've done the same things you've done, and so have many other traders I've known along the way. And most of the things I've done over the years, while they were very interesting and very stimulating, they did not have an edge. They always had profits, and I always was looking to improve it. What I didn't understand, that the process I was using and the beliefs I had were not aligned with this business. So I was trying to solve, you might say, for something that has nothing to do with this. Now, you may wonder, well, we're all looking for profits. Well, it's not about profit. Profit is the outcome of a plan and a statistical edge. It's not the random winning trades that we're all trying to make better. Very normal, very natural, and very logical. But the logic does not apply to the business. What we are driven to do and the beliefs we have are really much more rooted in our belief systems, and those emanate from our outside world experience and our primal wiring. Now, I'm not going to spend much time on this. I go into it all the time. I want to go into the condition of the market. I want to give you some ideas. And I want to show you structured trading. Now, the other thing about this is, if you haven't watched yesterday's stream, it's titled All-Time Highs, Plan, Execution, Order Flow Triggers. I strongly suggest you make time, if you haven't watched it, to put it on the list for this weekend. It is a terrific summary of this process, and it is highlighted, and it goes from everywhere from pre-planning into trade development, structured trades, statistical probabilities, order flow triggers, and so you can kind of see how all this works. It isn't just turn on the monitor, look at the market, and play a video game. Now, you will have winning trades doing that, but I think the objective, at least for me, and the reason I started Trader Lab, is to help traders build sustainability and to understand that this is a business and we're in randomness. So we need to make sense out of randomness, and we need to be able to manage our fear with uncertainty. And think about it. If you were blindfolded and someone told you to cross Fifth Avenue in Manhattan, blindfolded, and you didn't know if it was a red or green light, how'd you do with that? Think about it. Well, that's the kind of fear and uncertainty that's triggered here in the market, because when you make a decision based on a plan, hopefully, to put a trade on, it is 100% uncertain and it's 100% random. How do we work in that environment when we are wired to avoid risk? It's a thought, and you might find the answer here. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. We get there, we'll talk. And yesterday's stream, by the way, had a fair number of real-time trades. the focus of this stream is to show you, like, from the bottom up, how do you prepare for the day? What's going on? What do you do about it? And then who knows anyway? So you're not responsible for being right. You are responsible for extracting an edge and only interacting when you have an edge. Otherwise, you're just having entertainment and it's gambling. I always say, take a few dollars, go to the casino, have the cocktails, get the ticket to the buffet. It's entertainment. We're not here for entertainment. We're here to create a sustainable business. And let's see if there's a way to do that. And again, you have to vet everything for yourself. This is an approach that might or might not resonate with you. And like everything, when you first look at this, it's like you landed on Mars because it's foreign. If you were to strip all this away, and one of these days I'll do this, and you just see candles, what does it tell you? Well, fine, we had an update yesterday. What about it? Well, let's look at what happened yesterday, because yesterday was really important. New all-time highs. How exciting. And then the other part is we hit the RTH all-time high, made a new high, but we didn't take out the ETH all-time high, which is around 0850 or 75. Happens to be the current high of the day. How about that? Now, what happened at the close yesterday? We had NVIDIA. And what happened is very interesting. And this, I think, is where the magic of the auction, at least for me, it's almost magical, but it's really not, but it appears magical, because why does the market do this behavior? And we see it over and over and over again. Why doesn't my indicator do this for me? Well, the indicator is just following some derivative of price around. But what is this doing? All prices are not created equal. In this process, we're looking at volume. Because in your store, let's say the highest price for a can of tuna might have one buyer. They have to have it for the casserole. But is that equal to the price when it was 50 cents a can versus $1.50 a can? And $1 is where most of the volume takes place. Are all those prices equal? Well, they're not. Well, if they're not equal, then we have to value them differently. And the whole point of the auction is value. What's valuation? Let's look at value. If this is too high, where is too low? Well, the day before yesterday, the fair price was around 55-ish. Don't worry about precision. We're just talking concept. We had a new high off NVIDIA and then the Acapulco cliff dive. And what does that do? If the market is long, where everybody's hanging out in here, having a wonderful time, and we have longs in here, what might happen? If we do the Acapulco cliff dive, what are we doing to the longs? It's thanks for playing. We'll send you a coupon, and this is the retail price. We came down. We didn't quite get there. What does it say? Let's interpret. Maybe, and all I can say is maybe, and there's no precision in anything in trading. There's a lot of slop. And you guys who are engineers, I guess, you know about slop. So there's slop. And this is too low. Well, if I come out, blow these guys out, the weak ones, and I find too low, what might happen? I may come back. And what is the fair price in this whole thing? From the trend day up after the Powell announcement at Jackson Hole, which was this, we were on longs that day, very nice. And what does the market do? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to do whatever, right? Let's go further. Now, this is what this looks like, and this is yesterday's. This is the same thing. I'm going to show you a couple of the little items that you might find interesting. This is the market profile. Now, again, don't worry about this. You don't need to really do anything with this except understand what it says. This is a language. Let's look at what it says up here. Now, this is yesterday. Now, this high and this low were made off NVIDIA. and everything in between was yesterday's action. This up here is called the tail. And all it is the market runs up, and it's kind of like, gee, there's nobody else up here. We run out of buyers and we come down. Down here, you see the same behavior. And where's that retail price from this day? It's there. Well, this is almost a direct hit in the world of profilage. But what's over here? Another tail. Too low, too high. Too low, too high, fair price yesterday. Let's keep going. Now, we're going to go to the ETH. Wonderful thing. This is, I'm hoping, let me just look here. I got a lot of levels. I believe this is today's ETH, okay? This is the tail from yesterday. We didn't quite tag this. In the ETH, where's our support? It's out here at 72. That's, I think. I got to check these levels because I got so much stuff going on here. I just want to make sure I got the right levels. Let me see. Hold on, guys. Yeah, 71 is the ETH low currently, and notice where we come down. Here, this is the tail, too low. This is from yesterday. Is everybody with me? And what happened here? 29 was the key price. Tail, too low. What happens up here? Tail, too high. Tail, too low. What happens here? Tail, too low. What happens in ETH today? Too low. Do you see anything of interest to you? Maybe? Just saying. Now, let's look today. What happened so far? We went to this hype level. So we already know about this yesterday, and today, 83-ish is a potential target. Why? High volume, retail in the big box store. And if we go down and quote time frame as you think of it, or fractal, whatever you want to call them, this is our developing time frame. So we're going inside, think Matryoshka dolls or fractals. Now, is everybody with me so far? This is all before the market opens. Are you guys tracking? Hope you are. And I'm going to show you trades. Now, when I say show you trades, I'm just giving you ideas. You only need one trade, by the way. I know that's probably hard to imagine. I want so many. And why do we want many? We want them because of FOMO. We want more because we think more gives us more opportunity and profit. More gives you more risk. Have you ever thought about that in a day as a trader, your job is not to play a video game, but to wait for locations where you have a vetted edge? I know we don't think about that. We're all about click, 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 click. It's not about click, click. It's about no click until edge and range. Okay, statistical probabilities. Now we come back to our stat sheets. This is all, again, all set up before the RTH open. Let's talk about it. This is yesterday's high, RTH all-time high. This is the ETH all-time high, so this is still open. So it's a potential target. Oh, interesting, isn't it? So we are opening in range. And where was settlement, guys? I missed these. Hold on. Got some charts covered up. I just have to give you this because it's all based on statistics. 64.96 is settlement. So we're opening higher inside of value, but higher inside of yesterday's range, okay? I believe, yes. Higher inside of range. So what does it mean? Well, first of all, we're opening range in value. What does it mean? The market's in balance. What is likely? Well, potentially a low conviction day or rotations. I don't know. Do you know? I don't know. But we can always do anything, come out the top, keep going, or come out the top, exhaust, and then come back across. And again, nobody knows what it's going to do, so we don't know that. But what does it mean? Are we going to break out of this value area? Well, if we go up first, we have yesterday's high, we have the ETH high. These have high probabilities. And then what happens? So we're opening higher inside of yesterday's range on the edge, really in value. So this is kind of a fair area. The overnight volume point of control is the last auction. This is the fair price. You know, high volume. Your can of tuna is $1 in the store over here. And one moment. And we have a high probability of the ETH high or low. Let's think about this. Well, we know what happened on the ETH low. It tested an important area, and we're above it. There's a 97% probability we take out either the ETH high or low, and on its own, a 76% probability we get to the ETH high. What do you think? Huh? You heading south, or do you think north? Oh, and what about yesterday's high? Well, it's only a 58% probability, but what else do we know? There's an 82% probability of taking out either the previous high or low. I don't know about you, but if I open here, I got a pretty good shot there. And if I have a shot there and a 98% probability of ETH high or low, and the ETH high on its own is about 76%, wouldn't you go for this? I'm just asking. What do you think? Me? Yes. You? I don't know. And because of this, I have an 82% probability-ish. You have to vet these. Past performance, not indicative of future results. Who knows? So everything is set up for this. And then, now, what can happen? North, never look back, or. What is the condition of the market? Let's come back. The market is long. What do we get now? Longs. What happens if we run out of buyers? The longs become sellers, and then let's come back now the other side. This is yesterday's retail price. What's the probability of going there, you ask? 68% probability. Does that mean if we get selling, that maybe we can target this? 68%. And what do we know? What is the highest price in the intermediate time frame? It's there. So this, and this will throw you right now what I'm going to say to you. If I come outside, I can come back here. This is reversion. It's called mean reversion, heavy on the mean. We come back here. It's reverting to the mean, different fractals or time frames. And in a higher time frame, this is the highest volume. So multiple time framers, where am I going? If I get short, I'm going here. And there's one other little thing. I don't know if I put it on the chart. Close enough. There. Okay. This is the lay of the land. I'm sticking to it. Now, what happens? That, my friends, is as they say, the thrill of randomness. No clue. So now, what do we do with this? Well, what we do is we wait, and now we have structured trades, and we're anticipating behavior. We're not predicting it. We are anticipating it. And I always like to say clueless, but not ignorant. Any questions before we continue? This is all the front end. And you're saying, why don't you just show me a trade? And I'm saying there's nothing to do unless you know where. Are you guys tracking? Hey, Dan, if could you throw a link in YouTube to yesterday's webinar on trading all-time highs? That is something everyone should watch, I think. It just was really good, and I got to spend a lot of time on real-time narration and showing, trades. So it's all of this plus more. So guys, if you're in YouTube, hopefully you'll see a link in there. Copy the link, save it, put it in your shoebox, and take, as they say, a gander. So now we're coming into RTH open. I'm going to show you some structured trades. Now, everything I show you here is not mechanical. I always say to everyone, don't we wish? It can't be mechanical. It is very discretionary, but if you can define condition of the market, you might be able to operate in it and know where your trades show up. That's what you do. That's the work. I know everybody wants to click the mouse. That's not the business. The business is all done, and then you show up. It's no different than casinos. They know what the games are they're going to play. They're not making them up, making up games. They are following their plans. So here's what we know. High probability here. This was retail price in the ETH. We have targets down below. And we have the higher time frame target. Remember where the higher time frame target is coming from. It is coming from there, 83. So 92 is the retail price from yesterday. So if I open up and I go up, I have 92, and then I have this, 83. And if it keeps going, it'll do whatever it does. Not my job, right? Everybody's with me. Now, RTH open, first trades. So let's look. And again, it doesn't have to be your trade. This first trade I'm going to show you is extremely aggressive in the last place. And when I say this, I hope you're listening. This is not where a developing trader trades. This is where a developing trader learns to read rapid fire, very fast. And you have to develop unconscious competence for this. So in other words, when a behavior happens, I already know what I'll do when I observe it. I'm not waiting. I'm waiting for the behavior because I have to know what I'm looking for. What am I looking for? It's a great question. This is the retail price from the ETH. So if I open and I find too high, which is here, and I get my sellers. So what is this here? RTH open, there's no volume. It's Zippo. We're starting new, 8:30 Central Time. This right here, I call this a variable high volume node, and I start marking them. And all they are is micro or mini auctions. And as the market, now there's no volume, so this thing moves all over the place because as the volume comes in. So this yellow line is developing volume point of control. That's what it's called. And point of control is retail. So think of this as a shopper. Traders are shoppers. So if a retail price is too high, the market here's what can happen. You see a retail price, it does that or does that. And I always think about this. Your eyes roll back in your head and you go, oh, great, it can go up or down. Yes, it can. However, if I understand the language, in other words, what it means, isn't that different than just it can go up or down? If I know that this is an auction and then I'm looking to see the value, which is not my indicators, it is the participant behavior, which is why I don't use indicators. What do I need an indicator for? I have the ultimate indicator for me is the behavior of the participants and the language that tells me what it might mean. And I don't know what will happen, right? What do I know here? Let's go further. Down here, I have a variable high volume node. So it's right there. I'm going to label it, right? You notice I'm following a process. And I always like to say I'm clueless because it's true, but I'm not ignorant. That's true also. So I'm clueless, but not ignorant. And the idea clueless is not coming in with an opinion or cutting off other options of what might happen. So here's what we know. Let's look at right here, and we're in this. How long? 6 seconds. You cannot operate in this without unconscious competence. As soon as this flashes on the screen, I see the liquidity, and right here, it's either going to go bang, bang, or bang, bang. It goes the bang, bang, and there's liquidity here. VPOC migration. This is now too high. So I have what I consider support and resistance. Now, it's just my way of viewing it. And what creates resistance? If you go to the store, and now we're in microstructures here, so it's very fast, but there's an auction taking place. And if you go to the store, and you're the first person who walks in the door, and this price is too high, you're not going to pay it. Now, the price gets lowered. Are you going to pay that? Well, suppose you go, nah, that's still too high. And now the price is going lower. Are you going to pay that? Well, what do the participants do? Do they go, oh, it's too low? Or they go, no, it's too high. Now, right here, I get a sweep. A sweep suggests to me the potential underlying, and remember, this is trading, clueless, of a counter rotation. So I have a sweep, I have liquidity, and I'm clueless. Let's talk about what we know. Too high, too high, too high, going to zero, too low, new retail price. Is this too low, Tom? Well, if I don't come under here, then my resistance is here, there, and there. Buyer and sweep. Now you see the first 8 seconds or whatever it is, and I'm already looking for a trade. It's either going to be what? Long or short. Brilliant. However, what do I know? I know this is my retail price from yesterday. I have a 67% chance of going there. I know if I come outside, cross this, then I'm outside of value, and I have this and whatever happens, right? So let's see. And I know that we had an extreme yesterday. So too low, liquidity, cross high, shift up. Here's the possibility. Too high, down, here, too high, down, watch. Notice the behavior. See where it happens? Why? Too high. What's this? Too low. What's this? Fair. Now, if this is still unfair, I come back here. If I get below here, it's hasta la vista, we're off here. If I come above here, long. Watch. Support. Notice. What's this? Here's the deal. Potential long or too fast. Jaw on the floor. 11 seconds in, which is more like me. Right here, resistance, support. Do I know which way it's coming out? No clue. I'm looking for it to come out. I don't know. But what's my tip off? See the sweep? So I'm going, maybe long. And where's my resistance? Wasn't it here and there? And where's my opening swing? Here. It's long. So the first trade for me is long. I don't know. What do you think? VPOC migration. Going to the moon, Alice. Watch. Where's my statistics? Here and the ETH high. You wrote these down. What was it? The ETH high, 76% probability. The overnight volume point of control, 82%. Who knew? 76% for ETH high, and then it's whatever, right? And what was it for previous high or low? You wrote these down. That's why I give them to you. 82% probability. You think we're taking out yesterday's low? Well, not at the moment. So that's the first trades. Is everybody with me? Those are longs. Those were trades, and they were in the Trader Lab. And there was a couple of opportunities here. There's a couple of ways to get into this thing. Well, this is very aggressive. That's not for me. I can't respond quick enough. Wish I could. I don't. I was looking for the long, and this would be the ultimate spot to get it. But I don't have anything until I cross. When I cross, this is a long for me. Now, this is called VPOC migration. Let's label these. You're going to see why these are important. And I know you're going, well, what is this? I know. What are these high volume things? What makes them important? Because it's the pricing of the shoppers. The participants are shoppers. If this price is too low, we leave it. If the previous support and resistance, right? If this price is too high, this price is too low, and I come across, I can get long because I have statistics. So that's my first trade. This shifts up. This is another long in the Trader Lab, and it's a little more advanced. It's called VPOC migration. I always suggest traders don't trade this unless it's vetted, of course. What do I know? I know I got a long there. What is this? Well, if this is too low, this is too low, and this is the new retail price, I get liquidity, and I have statistics open. Wouldn't I consider maybe? And I'm using the term maybe. It's subject to. And remember, we can take stops all the time, anywhere. It's just part of the thrill. I could take this. If I'm an advanced trader, and this is only after you have a vetted plan and you're already doing your thing, this can become an ad. This is only for advanced traders because this is another structured trade. So basically, you'd be piggybacking on the long ad, and you could just take a piece. You could put a 1 on and just take it there. Or you could put a 2 on and scale ahead of the high because of the probability and look to exit here, or go here and keep 1 on as a runner. Who knows? VPOC migration. Going north, Lewis, feels good. That's from Trading Places, right? Doesn't say going north, but feels good, Lewis. Everybody watch Trading Places? I remember when they were making that movie in 1982. We were all pretty excited about it. A movie about what we do? Oh, my goodness. Couldn't wait to see it. Notice the liquidity comes in the book. Now, ETH high, all targets here are done. Okay? This trade, now remember, when this happens, is this also a long, you're asking? It is not for me. It is a trade management opportunity because now I'm looking at go north, young ES. Go north. Why would I know anything different? Here's what changes. Notice the liquidity here, lift off. Notice the VPOC migration, lift off. Who knew? But look at the liquidity here. Change. You should be screenshotting this stuff. What happens here? Watch. Uh-oh. You notice a change. Higher liquidity. Higher liquidity. Sorry, Charlie the tuna. Where's my resistance? Here. Watch. Too high. Resistance. Support. Here. Watch. So, here we have resistance. This is countertrend. This is resistance. This drops down. This says too high, potentially. We come back across. We squeeze out these guys. If you took a short, and I consider this countertrend at the moment, because we're above this, above the mid, above the VWAP. So this is countertrend. So if you took this, you would take a stop, depending. If you sold it here, as an example, at 6, you might or might not get scaled, okay? And I'm going to assume you didn't. And it would come across, you would take a stop. Now, the thing about this is the all-time high from the ETH. I can't suggest to you whether you would take a short or not. For me, at this point, I had no shorts, but you might take this. And I'm saying you might, but you'd be ignoring this. That's up to you. I'm just saying. Now, this is the next target because we got yesterday's all-time high. This is a new all-time high. And then you got this. This is the last all-time high from the ETH. And we may still take it out. Doesn't matter, does it? So now, no clue. Watch. So we have this thing. Who knew? Break low. What is this? See if this doesn't have some familiar look to it. What happens here? Too low? Too high? Variable high volume node. Let's do this. We did talk about a short in TraderLab, so I'm going to show it to you. Now, I'm in the short side, and of course, now the market's back on the long side. I got to explain why and how. This sets up a short. Let's look at structure here. So too high, no clue, okay? You get short here, you get spanked. You get short here on the break, you could put the trade on again, and you're going here. Support. Now, if we break below and we pull back and we get VPOC migration, we have this level. I'm going to put a little line in here for you just to help you see it. You see where it is? It's there. Hope I got that pretty close. There. So it's a hair off. Close enough, guys. Don't hold, So it's this. So what I know is I have fallen out of this distribution. In other words, the buyers were here. That's why it went up. Now, if this is too high and I fall out, then I can sell this if this is an outside edge, and I can look for it to come there and now come out the bottom potentially. This is a short. This is a short. This is a short. And where are we trying to go with this thing? There, 92. And you'll like this, at least for me, this is all narrated here. And that trade was over. Okay? That was the short. And again, why did we go here? Because that's the retail price in the higher or intermediate time frame. And the probability of getting the ETH high or low, let me give you that one, just so you don't forget how exciting all this might be, is 33% probability. So it's not the highest probability. So this is why this, and if you go back to the structure I showed you at the top of the stream, that's the ETH low from today. There's the tail from yesterday's NVIDIA blowout. This is too low down here. So what we're doing is the shorts, we're targeting this area and then the higher. Brain is gone. So the shorts, this is yesterday. We're targeting that area, the 83 and the 92. So what did we do? 83 and 92. So that's how the auction works. Now, there's more. Let me go on here. So now, VPOC migration. Now, here's the interesting question for this group. If this is the new retail price, I'm going to mark it, then what does that set up for us? Now, there's conflict in this, so I have to talk about it a little bit. Because this is very confusing for all of us. And by the way, if you have questions, post them. I'll do my best. How are we doing? So this is a new retail price. What is this? 6,500. This is too high. Too high. So how can I operate in this? Well, this is the current retail price. What's out here? Low volume areas. In other words, I'm not paying that. Retail. And then rotations. So this changes things. Now, this is confusing. Let me give you some ideas. We always talk about multiple time frames, right? Well, in an intermediate time frame, the target was there. So if that's too low, it's the same concept as this too high, because this is in a developing time frame. And this will drive you crazy because it's a vertical integration of time frames. And you guys all think of time frames. I got it. Time. Time is not really what I use. I use volume. So it's not based on the clock, whether it's intraday or any other thing. It's based on the volume. Because the participant behavior is volume based. If they like a price, they're going to hang out. And then if they figure out they don't like it anymore, they're going to move, and then they're going to auction this level. What do we think of this? Well, is it too high or too low? Well, if I find too low and I'm in an intermediate time frame, I find too low, I can do a couple of things. If I'm trading a higher time frame, I can use this to get long, put my helmet on and get in my Barca lounger and forget about it. And either I get run over or I'm trading a larger swing. Or, here's the or I'm aware that I tested a key level, but intraday, I can still rotate. And I have, in this time frame, or fractal, or whatever you want to call it, I can trade from there to there. They're the same thing, aren't they? If this is too high, this is my retail price. Is it too low, or is this still too high? Is this too low? See, I can come back. If this is too high, I can come this way. But I know that possibly the low of the day is in. If I know that, I can still operate, but I have to choose. Am I done with the shorts, or am I going to trade inside of all this? And that's what multiple time frames are. Think of them as a vertical integration. So vertically, this is higher time frame, long. Inside, think Matryoshka dolls. This could be short. Inside of a long. Does that make you crazy? So in the Trader Lab, what I always suggest to developing traders is don't get crazy. It's random. Select the side. Stay with your plan in the fractal or rotations you trade. Some traders are going to put this trade on and get in the Barca lounger. Other traders are going to be working more of a intraday time frame. Let me show you the next trades. Now, we have a couple trades in Trader Lab. One moment. You notice how the market is behaving right now? If you're in Trader Lab, you would understand why it's doing it. And again, it's time frame oriented. This right here, now for me, my next short is here. This is a structured trade in Trader Lab. It's called VWAP to VPOC, and the idea is to come down. But the thing we know is we already got our low, possibly. So then if you take this trade, your primary objective is this. It's called mean reversion, underlining the term mean. VWAP to VPOC is a structured trade. 65 VHVN to mid to VPOC is a structured trade. Let's look at it. So this is a short to there. That's a short to there. And we remember what we know. Too low. Maybe. No clue. Here to there. No clue, right? So if you're taking this trade, short, you be scaled. Short, you be scaled. Short, you be scaled. And you know this is an obstacle, right? You know we found too low right there, right? There is a reversal trade. There's the sweep. There's the micro high volume structure. There's a long or an exit. This is a short to there, short to there, short to there. It's not my thing. I can take them. My thing is range. Short. Now, you take this short, and I talked about this in Trader Lab, you've got to be scaling ahead of the mid. Because if we have found too low, which looks like we did at the time, then I have to look at it coming. I'm going to try to get scaled here because I can get retail traders buying the mid, fine, and it's perfectly viable. That was too low, and then get squeezed out. So I'm leaning against the liquidity. I'm leaning against the variable high volume node, right? Location, if that's too high, what might I get? Come there, and then helmet. Let's see what it does. Notice where I get the reaction. So the short was here to there, and then going there and whatever. I get take it out, and that's a scratch. Now let's look further. You say, what? Watch. So what do we know? This was too high. There was my liquidity. There's my short. There's my scale. Anticipating buyers. If I get the buyers and my sellers hold the line, the stops for these guys are going to be under here. So the trade is so either through there to there, or there to there, under there, or out. It goes, it squeezes. What happens next? Where's my next location? It's here. Variable high volume node. It sets up what? Another short. Where does it go? Notice. You see? Can you see the method to the madness, perhaps? How are we doing? How are we doing in YouTube? Hope you guys are getting something out of this. This is Trader Lab, and you can learn this. Now, here's the thing about this. This is not about how many trades can I take and being a whirling dervish. This is very much a business of being selective and recognizing the condition of the market, and then where might a reaction take place. This idea, this profile, is all we're doing is measuring and observing behavior. If this is too high, now don't forget, this was too high, and this looked like a pretty good short to me, which is why, it's a trade I participated in. This is another short. And then remember what the target was. Wasn't the short target from here to mid to scale and then to here? It squeezes through, comes to the next level. Where does it go? I get VPOC migration. What's the possibility? Teeth chatter. Up or down. Where to? There. Same trade as this, different location. Now I got the stops here. Would have been nice if it just did this. C'est la guerre. Life in the trading lane. Here we go. Target. So far, so good. You see how these levels might work? Then what, you ask? This is the primary trade. So it's there to there, there to there. I'm okay with this. Are you okay with this? Oh, yeah, this is day trading. I know. But what do we know now about this? Maybe it's too low. Maybe it's too low. If it's too low and I find my buyers, since this is the auction, then where might it go? Well, the trend in the higher time for, let's come back to what we know. This is the key level. We are above it. This behavior coming here is the same behavior is coming there. It's just in a different time frame. So the behavior of that is the same as wherever it went, the behavior of that. You see? Too low, I'm out of here. In the fractals, too high, I'm out of here. Oh, sorry, Charlie. Too high, too low. Too low, what's too high? Well, it's not this. That's too low. That's too low. What's the trend? Up. Where was too high? Here and here. Where are we going now? North. And what is the probability of taking out the first hour's high or low? Let's come back to our statistics. I know you write these things down. 98% probability. And what is the statistic for the first hour's high? 67% probability-ish. Past performance not indicative of future results. If you understand what you're seeing, where it might happen, not what will happen, and you can define change, then while you're looking at probabilities and behavior, you can get an alignment. Then it's waiting for your bus. That's as difficult as this is. And yes, it's random, and you will take stops, and you will be out of alignment, and you'll want to hit your head on the desk because of frustration and emotional responses. But if you can separate yourself from how you feel about it and just wait for your bus, these are all structured trades. Now, I get out of alignment, I take stops, we all do, so we got to get over that. And what happens if I get out of alignment and then I don't have a way into the trade? Uh-oh, gee, I missed it. Now FOMO, right? You know what I do? I go, well, never mind what I say, but I'm just going to say, I go, well, there's going to be another trade. I'm just going to wait for it, and it will show up. And I already know where my trades will show up. I don't know if they'll show up. I know this is an interesting thing to observe. What was it? Too high. What else do I know? IB stat. And we never have to take it out. We can still do the Acapulco cliff dive. But what do I know? Too low. What do I know? Too low. What do I know? Too low. What do I know? Too high. What do I know now? Maybe too low. Where am I going? Maybe here. Not a recommendation. What did I not do? I did not clear the all-time high from the ETH. Does that give you something to think about? You have questions. This is the Trader Lab. You can learn this. I'm not saying it's right for you. I'm just saying you take pieces of it. If you're looking at this in a holistic way, like everything all at once, it's conflicted, isn't it? Well, can you isolate components of it and then create a structured trade? Now, I've shared 60 PDFs of these trades with some explanations. Now, there's no plug and play. Don't we wish, right? Some of these are just screenshots. I'm not a vendor. There's no cost for this. Some of these are actual live trades. Some are just like this. You know, you can see the trades. They're, targets. And you're going to see process, And none of these are from 2020, and again, I'm not a vendor. Traders are asking me, what are you doing? So I just threw these together. But there is a library of webinars now that you guys can watch. And what you're going to see is I do the same thing. It's process. So how do you operate in randomness? Well, something needs to be anchored. Most of us, when we're developing traders, throw kind of the spaghetti against the wall. And the perception, at least that I had, was if I had more indicators and more time frames, I could squeeze risk out and create more certainty. Very logical. But here's the problem. All indicators work randomly, of course. So every indicator has winning trades. That's why you got 150 indicators in your software toolbox. First question is, why do you have that many? Why do you need that many? And they all have winners. Here's the other thing for you. If you had a magic 8-ball and you asked it what to do, you'd still have winners. If you flipped a coin, you'd have winners. And if you had a random buy-sell generator and you had no idea if you were long or short, you'd still have winners. See, gamblers win, right? So they have winners. So we all have winners. Isn't that part of the problem? That we have winners in a random environment without an edge? Then we're just gambling. How do you separate gambling from sustainability? That's always the question, right? Well, that's what I tried to answer when I created Trader Lab, is to help you guys understand the business. The fact you get a software toolbox and you go down, the path of research and discovery, it's all really nice. We've all done it, some more than others. Me, too long, too much of that. When I started in 1980, we didn't have PCs or an internet. We had dumb terminals, basically. They were pretty dumb. And multiple time frames, Wells, Wilder, and all that was just coming where we had access to it. So I spent a lot of time reverse engineering those tools because I thought that was the answer. Divergence, RSI, stochastics, Bollinger, it doesn't matter, moving at, all kinds of derivatives of this stuff. So I would pull them apart and then I'd try to make them better. And then eventually I built trading systems and optimization models. So I did that with the idea that the answer was in these indicators and the right mix and then it was the right tweak. You kind of take these ideas and you run with them. And those ideas were years worth of work. And I always ended up coming back to the same place. And this was what's pretty important. I coined a phrase called Trader Groundhog Day, because I'd work hard. I'd have winning trades, of course. Whoops, wrong place. And I would think that I just had to make it better. So I was always repeating the process, but I was always coming back to the same outcome. And I just thought it was me that I had to do it better. But what it was is I didn't understand the business I was in. I just thought it was, get percentages and win rates and all this, and it would all come out in the wash, right? So I was always adjusting things, looking backwards, trying to fit the market into a box. But the market is dynamic and always changing based on participant behavior. So I was trying to solve for the wrong thing. I was trying to compress randomness into more certainty, predictability, and confirmation. So the language that we say to ourselves really uncovers what you're trying to solve for. And I understand the logic is, I want to take less stops, I want more profit. Yes, of course. But what is the process to get that? You see, if we can't eliminate risk, then we have to operate in an environment of risk. And the thing about risk is it's random in the sense of the outcome when we interact. Why might that be a long? We were asking, weren't we? Isn't it the same reason that the long trade in the morning was a long? And this here actually could be a long or a cover. This out here, when you break above this, these are order flow triggers, a whole nother conversation. I really don't have time to go into it today. This is an order flow trigger. This is a VHVN trigger. All these are potential longs in TraderLab, but these are advanced. I don't suggest anybody do these. Now we have a sweep, and we've now made a new all-time high. And I mean all-time high, because this was the last all-time high, and now we took it. Now we have the sweep. 1,500 stops coming out. Thanks for playing. They get a coupon to the buffet. Now, you want to watch this. Not a recommendation. This could be an extreme. I'm not saying it is. We have a breakout. You can get your breakout traders, and we have some icebergs. We want to see now what happens here. Are we going to press and keep going, to the moon, Alice? Or is this an excess? No comment, no clue. Not my job. This is the IB. Remember, it had a high probability. We have two possible trades in here. One is called the IB continuation trade, which would be a long continuation. It's right here. Or we're going to break below this, and now we're going to get the profit taking, and we can come all the way back. I'm not telling you what it'll do because I have no clue. So since I know I don't know, I can't predict anything. What I know is I have a structured trade here, and I'm going to evaluate it. This is my liquidity. I've got my support under here with the limit order book. These guys got, but here's what you must be aware of. This. And often when we see this, we get a counter rotation. What we don't know is the depth. So we're going to watch that right now. And you guys have questions, throw them in the hopper. 1,500 buy stops coming out. They get a coupon and the ticket to the buffet. Are you guys tracking? I hope you're getting something out of this. This is TraderLab. And this is about the business of trading. You can learn to trade, I believe. In fact, I believe anyone who comes to TraderLab can learn to trade. Now, you might be thinking your job is to take all of these trades. It isn't. Your job is to identify conditions and get an alignment. If this is not your trade, then you don't have a trade. This could be, you see the extreme? This might be the high of the move. I don't know. Do you? So then I'm going to look at this. See, this is a big deal. That's a big deal. And if you're in TraderLab, you know when you get a sweep, there's a couple things. We can, if this holds us, we can go higher. If we break under this, which is the same as that, but in a lower time frame, what does it say? Language. I'm just going to call it an HVN. Not going to, get too nutty about this for you. But let's think about the language. What does it say? Sweep, location. Now, I'm not saying anybody should short this. I'm not giving a recommendation. I'm only here to show you how to read the behavior. Then you have to know what you're going to do when it shows up. So this right here, this is the key. And then this is the next element. This is too high. This is my resistance. This operates the same as these. It's all fractal. And there's always some discussion what's a fractal. So I'm going to say I'm used to calling them that because they are structures inside each other. And there's a symmetry to this thing. The auction is symmetrical. It does this. I'm not paying that. Yeah, but it's on sale. If this retail price in this structure becomes too high, think of it as shopping in the convenience store down the street, then where's my last location? It could come back here or just out here to this high volume. So if I put a trade on, and I'm not suggesting anybody sell this, I'm just saying you can narrate it and navigate. If you narrate it, you can then understand what's happening. Not what will happen. What do we know? This might be, we might have the high end. We can come back and check this, make a new high, or we're done. And now the longs that are in here go under the bus. And this is the retail price in the developing time frame. So in fractals, if you want to call them that, or microstructures or micro time frames, that's too high. In the developing time frame, this is the retail price. So here's what can happen. It can do this and come down anywhere here and go up and test this and make a new high a day. This is too high. If I stay under this area, I can continue lower. I can come back here. And I couldn't tell you which one. I will tell you that, remember, the trend is up. And in the higher time frame, you see, you always got to come back. What did we do? We checked this, which is the higher time frame location. So if this is too low, you can be long and just sitting in your Barca lounger. With this, you could be out of the thing, and that's a nice trade. Or in a short time frame, you're out of your long because you use this as a trade management tool, which it is. Or if you're a counter trend trader, I know there's a lot of ors, you sell it, but you're on the wrong side of the trend. And that's okay if you trade counter trend. You see? I hope that makes sense. Is this too many choices? Here's how you make the choices. Learn how the market works. Then extract your trades from it. Not all of these, one of them. Can you do one? I challenge you to do one. If you can do one, you're going to do a proof of concept, you're going to build a template, and you're going to learn how the market works, and you're going to be able to extract statistics to give you what's called an edge. If you have a statistical edge, you're going to develop the courage to manage your fear. When you don't have statistics or something tangible, all you have is intangible. Emotions are intangible. And that's the fear. And I call that Hyde. Jekyll and Hyde. Hyde's a lunatic. Fear. When you're making a decision to put a trade on, you're looking at this. So what do we have to know before the fact? We have to know the behavior and what change looks like based on how we define it. So if you're only on longs, because that's the trend, this is trade management and not a short. If you flip like a flounder on the dock, you might, and you're a counter trend trader with an edge who's inclined to sell new all-time highs. I'm going to say, if that's your thing, go for it. Then you'd be trading back to here. And here's the thing. If we can get below these levels, we got the mid and we got the stops and we got the VWAP and we got the VPOC. All of these are viable targets if we gain some traction. And why might that be? And I'm not saying it is. Let's talk about why. The market goes up, go down. The market goes down, go up. So the question becomes, is this all the profit taking we're going to get? And now the buyers are going to come for it and we come back up and maybe make a new high? Or are the longs in here vulnerable? I don't know the answer. I know it can do either thing. So for me, if I take a short, I got to tell you, it's like being a Subway purse snatcher. And for me, I'm more of a relaxed kind of trader, if there is such a thing. I just take the big swing and I'm done. Doesn't matter. Now let's see the behavior when we come back up here. Remember, too high. And what this is now is an outside edge, and it's the first hour's high. So we have a couple things going on here. Outside edge, low volume node, and this. So this is important. This is resistance. This is an outside edge, and we want to see what happens. This is not a trade recommendation. We're just tourists, right? You guys have questions, throw them in the hopper. I'm going to come up. We're going to watch this thing right now, see what it does. I have no idea. It's not my job, and I'm only showing you structure. Market can do anything. Remember that. So what's our structure? Let's look. Too high, too low, retail. If this becomes too expensive, I can leave it. Where's my resistance? It's out here, and especially there. If I come across this, north by northwest. If I can't regain this, that is a possible suggestion of this and this. If this is too high, then that. If I can't get below here and get there, then what? Then that. That's what I know. I don't need to know anything more than that. I can tell you taking shorts up here is counter trend, so I'm not especially a counter trend trader. Just depends, you know. And when you're at new all-time highs, I think the Barca Lounger is a good place to hang out. But let's watch the structure together. How you guys doing? I hope you're getting something from today. And if you're in YouTube, be sure to take a look at there's a link in there that I strongly suggest you watch. It's yesterday's stream, new all-time highs. Check it out. Please give a like also if you're visiting. Did we get that one in there from yesterday? Is that in YouTube? I can't see it. You know, trading new all-time highs. I don't remember. Oh yeah, targeting all-time highs. Is that from yesterday, Stephen? I think so. And then make sense of random rotations. Those are really good. Anyway, I hope you guys are getting something out of this. So let's watch the behavior. Narrate with me. Narrate. If this, then that. If not, then what? If this is too high, if this, then that. If not, remember this is counter trend, then what? North. That's it. What else do you need to know? If you're in a business where you can't know anything else, and what do we know here? Isn't this the outside edge? Now, again, this is, stepping on a rake and stepping in front of a door, and having it slammed in your face. So what I'm trying to say is this is counter trend. So it's very much not what I would suggest anybody does unless they are very, very experienced. So let's look at where this is. The outside edge is here. This is where we found, and there's where the buyers were. And of course, the sellers are up here. Thanks for playing. You get a coupon to the buffet. Notice this. 1,500 stops. Oh, the pain of it all. Now what? 5. Stop. Where's my buyers above here? So far, missing in action. Doesn't mean get short. What this says is right here, break here. This is what it has to clear to go higher. And that's your backstop. And I'm not suggesting anybody sell this. I'm suggesting you follow what I do so you can get a sense of how the market works, not what it'll do. The what you will do has to do with the trend. So in a short-term structure, you could be trading these rotations if you have an edge in it. I'm more of a Barca lounger trader. I like to get on a trade. And my only thing I really worry about in trading, in the term worry, is maybe that's not the appropriate target word to use. Let me put it this way, apprehensive of, so fearful, is not getting risk neutral. If I'm going to put a trade on, I'm not trying to stand in front of the locomotive. I'm only reading the behavior. If you're taking trades today, would you be selling? Would you be buying retracements? Which one would you do? Think about it. Would you be selling this? Or would you be aside? What would you do? You need to answer it right now, because you need to know the answer before you ask the question. I'm showing you structure and how you can interpret it, not what to do with it. We have traders in Trader Lab who will sell this. And we have other traders in Trader Lab who wouldn't go near a short today. You would determine that based on your research and your understanding of market mechanics. When you're a developing trader, this is not where you dance, in my opinion. This is where you learn. This is where you observe behavior and you narrate it. This is a real-time narrative. It's happening right here, right now. There's no indicator. There's no nothing. Our indication is the shoppers. What do they say about this price? Now, here's the thing. This might be too high only right here. And then if I rotate down, why does it come up? There are buyers here. You see them? Absorption. So what do I got here? My sellers. You see the icebergs. What's going on here? Icebergs. I still got my sellers. What's going on with the liquidity? Sellers. What happened here? Sellers. They got blown out. All right. And there they are. Sweep. That sets this up and this up. And then it's what happens here. Trend is up. You feel lucky, as Dirty Harry used to say. Well, do you? That's what this is. So do you have an edge counter trend? That's the question for you. Me, I tend not to. But I also know that if I can't clear this, then there could be trouble. And then I might be thinking something different if my plan supports the idea. Why? Because this might be on the hit parade. So I know if I find too high, wherever it might be, and I have an outside edge, and it's not a recommendation, this is counter trend, I could go there. That's what I know. So am I going to trade counter trend? I can't answer that for you, but I can answer for you is where that you would observe behavior, and then you have to know you can have an edge getting short at new all-time highs. That's really the answer to this. So let's watch it. I'm going to put this little line in here so we can watch it together. This is your resistance. This is your outside edge. The nature of the market is come back and check these areas. And this is really where things get dicey if you were short. So let's just observe it. This is the auction. And again, I want to stress, this is not a trade. It's not even a short. It is all behavior. So now you want to watch this and you want to see what happens under here. So let's just watch it. Remember, the trend is up. So you wouldn't do anything with this, but you want to observe it. Let me move this thing over so we can see our structure. What we're looking at is this low volume zone. This is where the buyers were and the sellers took over. So the idea is this is the resistance, this area. Do the sellers come back in here? Because that's where they took control. Or now, was this just profit taking because we made a new all-time high in the planet? And then do we get our sellers again? Or just motor on through? Trend is up. So that's the question. I don't have the answer. So the question is not answered by me. I asked the question. I don't know the answer. I know where the behavior might show up, and I know where the trade will fail. If I know that, and I have an edge, trading new all-time highs and getting counter trend, I'm not saying anybody should, then I would understand how to use this for potential behavior down here, and it is counter trend. So that means not a trade I would necessarily take. But all I'm here to do for you today is show you how to read the behavior. And maybe you can do something with that if you understand what it says, right? And, whatever it does, it does. Is that making some sense? Yeah, hi, Louie. Louie, you didn't stop by the Trader Lab. Louie with the one lot. I'm assuming you got that from me many years ago because I always used to refer to Louie with the one lot in my streams. Am I correct? Okay, so let's watch this. See how this is behaving? So what do we know here? The sellers are here. The high volume is here. This is where we found too high. So, and they're pulling. So they're opening the hatch, okay? So this looks like it's going to continue higher. But we have to see what it does here. This is your resistance, okay? So that's all you got here at the moment. You see what I'm saying? Now, again, this does not tell me what will happen. It tells me where it might happen, and I don't know what will happen. Are you guys tracking? Why? Let's look at the length. Why did we get a reaction there? Because the shoppers, let's go back to the supermarket together. We're down the street at the local store. Pint of ice cream Saturday night. You got to have it for the movie. You'll pay anything. Is this price too high? Well, we did find our sellers. Is it still too high? Or are we going to push the shorts out and make new all-time highs? Maybe. Where's my over-under? Isn't it here? Right? Do I need to know anything else? And can I know anything else? No, I can't. I know where it might behave. This is what the auction is about. It's levels. So it isn't a line on the chart in the sense you guys draw a trend line or something, whatever it is, or your little Fibonacci's, it's going to do this or that. We've all been there and done that. Or your Elliott wave, your pitchforks. I don't even know. I've done harmonics, Fibonacci harmonics, time cycles. I've done so much stuff I can't remember. And a lot of it was so interesting to me because I would see these things all have winning trades, everything. And I think I mentioned to you guys many years ago in, it was called Commodity Magazine before they renamed it Futures. There was a full page ad for an astrological trading system. Software. And this is back in the Stone Age, DOS, I think it was. And it was a lot of money. Like over $1,000, and it showed a track record, when the moon is in Uranus or wherever it is. And that somehow, in the philosophy, the idea, and you'll love this, because anybody can wrap anything, put it in a wrapper and sell it to somebody who'll pay anything because they're desperate to become a profitable trader. And the track record, of course, says hypothetical, blah, blah. And they sold these things. And people bought them because the concept was that the tides impacted human behavior. Now, isn't that logical? Doesn't that prove something to you when you're scouring the internet and you see all the marketing hype and all the one thing you only need in all that, and you think it's plug and play. Guys, it's not. And there's so much nonsense out there, you can run out of dollars and time. So I can't tell you what's right for you. What I can suggest to you is you take the experience you've had and you get some yield out of it. We all have something called trapped equity. You know, the dollars we spend, the dollars we lose, the chat rooms we pay for, the gurus, the simple sauce. I don't even know. You know what I'm talking about. Snake oil's been around since snakes. When you go to somebody's chat and they have all these affiliate links and this and that so they can generate income, think about it. I'm not saying you can't learn something. I'll never say that. But if you can't quantify it and make it consistent, you cannot measure it. Notice where we're going. We're getting through this level. What does that suggest? North. Not a recommendation. That's what it suggests. And what might you do with this? What do we do with these things? Its resistance becomes what? What do you think? Let's watch the behavior together. Based on what we've been discussing, what happens to resistance? Resistance. And this is resistance. This is it. And this, we're above this. If I get through this, what happens here? What is potentially too high becomes too low. And then, I don't know. What do you think? Let's see what it does. Not a recommendation. These are just structure. You have to decide what works and fits for you. So let's see what happens here. You guys have questions, by the way. Throw them in the hopper. I'll do my best. Appreciate you guys visiting the Trader Lab today. This is what the Trader Lab looks like, guys. It's open to everyone. There is no cost for this. See if I can. There's not only do you have the Trader Lab community, this is available to everyone. There's a lot going on in here, a lot of charts, a lot of interaction, mutual support. This is the one you guys ought to watch if you're visiting in YouTube. There is a link currently in this stream, but you should just go out into YouTube world. Definitely watch this. Targeting new all-time highs, plan trades, order flow triggers. This is really good. I've asked our curator, Ned, to put this into the library in a prominent location because it is a good overview. Making sense of random rotations. How do you, then the psychology, what about that? You know, makes us go crazy, doesn't it? Well, yes, it does. And this is the library of webinars. Start here, it's the primer. Then day trading, fantasy or reality. Stop gambling, start winning. Trading in multiple time frames. Day trading, why most traders using indicators fail. All kinds of nice stuff. Then there's a document section down here. Statistics that you hear me talk about every day. The probabilities, context tips, a glossary, and understanding mental obstacles, and much more. All this is available to Trader Lab. There is no cost. There is a link in the bottom of YouTube, but you have to vet everything. You know, everything is random. You have to find what resonates with you, and there is no plug and play. That's the nature of the beastie. Don't we wish? Let's see what it's doing here. We did not get through the high. Support. Resistance is here. We're below it now. We clear this, then we're back on that same idea. nobody knows. Okay, guys. So, it is what it is. So and I'm not a counter trend trader, but if I put this trade on here, if I did, I would take a stop here. Perfectly okay with it, just not euphoric. Come out here, micro high volume is here, break, I'm below this again. Again, these are all counter trend. It could be a short if it's counter trend. I don't trade counter trend, not interested. I'm much more interested in the Barca Lounger. And then I have, you see where the buyer, let me show you this. I'm going to show you something. These are not shorts, they're just behaviors. If you're taking shorts, you're not aligned with the trend. Let's look at this. Here, let me show you some concept here. Just a little something. This is support, right? It was resistance. That's the first piece. Now, let's come back here. Sellers are here. Buyers are there. Microstructure. Break high. Sellers are here. So if I put a box around this thing, here, let's just look at this. I'm just going to show you a little idea. I've only got a couple of minutes. Please give a like if you're visiting in YouTube. Be sure to review these if you find them interesting. If you want to learn more about this, you do need to come to Trader Lab. So this is too high, too low, break. Right here is resistance, break, resistance. High volume structure is there, right? Here, there, resistance. So resistance, support, break high, resistance. This becomes support. This is resistance, resistance, break high, come back. Where's support? It's there, there, and here. Break high, where's support? It's here. Where's resistance? It's there. Where's resistance? It's there. It's there. Where's support? It's here. If I can clear this and clear this, I've got, it opens the door. If not, there's nothing to do. Just saying. You can learn this, but then you have to know where your trades will show up. I have no idea, of course, that when I get a short-term sell here, that it's going to do this. Do you? I don't know. But when I come back in here, then all I know is I tested this. Don't forget, I had this sweep. I can sell this if it's in my plan, or I do nothing. Remember what the idea of the trade was that we were talking about over here. It was the return here. You guys can get to watch that. It's not a trade recommendation. This is trading, and we all take stops, and I'm not calling trades. Objective is to help you see that there are ways to organize this information and to anticipate behavior. And then when the behavior shows up, if you have an edge, you put your helmet on, and the outcome of any individual interaction is random. And over time, if you have an edge, that's the business of trading. Please give a like on the way out. Thanks for visiting Trader Lab today. Look forward to seeing you tomorrow. Trade safe. And if you're gambling, it might make sense to maybe create a plan, create a statistical edge, and Trader Lab's here for you. Use the link in the bottom of YouTube. There's no cost. And also, please give a like on your way out. Thanks again, guys, for visiting Trader Lab today. Appreciate your time and interest. If you're not a sustainable, profitable trader, you might want to consider visiting Trader Lab. There's no cost for it, and it might be a great place to visit on your journey. Thanks again, guys. Look forward to seeing you tomorrow.